If your business operates in Canada and the United States, there's a shift coming that you cannot afford to ignore. Tax compliance is going digital fast. We're talking about e-invoicing mandates, real-time reporting, and governments getting direct visibility into your transactions. Almost sounds like Big Brother. Now, on paper, this sounds like efficiency, but in reality, it's a complete change in how compliance works. And if you're not prepared for it, you're just not late, you're exposed. So in this video, I'm going to walk you through what's changing, what it means for your cross-border operations, and what you need to do to stay compliant and stay ahead. Hey, I'm Duncan McPherson and welcome back to my channel. I'm a duly qualified CPA in both Canada and the United States, so I'm here to help companies like yours navigate the cross-border tax jungle without getting caught offside when the rules change. So welcome back to my channel. This is one of those paradigm shifts that's going to catch a lot of businesses off guard and flat-footed. Because for years, and in fact forever, tax reporting has been reactive. File your returns, submit your reports, and deal with the issues after the fact. Well, that model is disappearing faster than the CD player. Governments are moving towards real-time tax reporting systems. This means instead of reporting after the fact, your transactions are being captured digitally and submitted electronically, and in some cases validated even before the transaction is finalized. This is what we call e-invoicing and continuous transaction controls. While Canada and the US aren't fully there yet, they're moving in that direction and quickly, especially in Canada where CRA does less and less by audit and more by algorithm. Globally, this is already happening, and cross-border businesses are going to feel it first. If you're operating in both countries, this creates a new layer of complexity for you, because now it's not just about filing your tax return or filing your sales tax returns or getting your numbers right at year end. It is about making sure your transaction level data clean, consistent, and reportable in real time. That means your invoices, your revenue recognition, your sales tax calculations, and your intercompany charges, all of it has to line up. Because when the systems start talking to each other, mismatches don't go quietly into the night any longer. They will get flagged, and soon it will be before year end. And here's where I see companies running into issues. They assume it's just an accounting system update. Well, it's not. It is a new paradigm. If your invoicing doesn't match your tax reporting, if your intercompany charges aren't properly documented, you're going to have discrepancies that trigger reviews, or even worse, penalties. And once these systems are in place, you will no longer have the luxury of time nor the option to fix it later, because the reporting will be happening as you go. So what should you be doing right now? There are 4 things I'd like you to focus on. First, number 1, take a hard look at your invoicing process. Are your invoices standardized? Do they include all the required tax information? Can they be easily adapted to electronic formats? Second, review your systems. Are your accounting platforms, your billing systems, and your ERP all aligned? Or you're relying on manual workarounds that won't scale? Third, clean up your intercompany transactions, because these are always the first places mismatches show up. Make sure your intercompany transactions are, number 1, documented. Number 2, priced at fair value. Number 3, consistently recorded on both sides of the border. And number 4, make sure you have built a complete circle of documentation around your intercompany transactions. Contracts, invoices, support files, everything should tie together. Because in a digital reporting environment, documentation isn't just protection, it's required. Go to my website, themactax.com. Click on the CFO Toolkit. There you will see a video on how to maintain a complete circle of documentation. Have a look, you'll be glad you did. Okay, so now let's zoom out for a second. This isn't just about e-invoicing. This is about governments moving to full visibility of your business activity. And once that happens, audits become faster, your errors become easier to detect, and your compliance is less forgiving. So the companies that stay ahead of this are the ones that build clean systems now, not later. Currently, 80% of CRA and IRS problems are from late filers and sloppy bookkeeping. In fact, in Canada, CRA targets late filers. Why? Because they know their bookkeeping is sloppy. And that's now. And in the digital world, it's going to get a lot worse and a lot easier for CRA and the IRS to start asking questions. Let me put it simply. You cannot bolt on your compliance after the fact anymore. That approach is done. Going forward, your compliance must be built into how your business operates day to day. And if you're running cross-border, you need that system to work on both sides of the border and in tandem with each other. So if your company is operating in both Canada and the United States, and you're not sure how ready you are for e-invoicing or digital reporting, go to the MacTax.com and book a no-cost cross-border tax strategy call with me. You'll be glad you did. We'll walk you through, number 1, your current system, number 2, where the gaps are, and number 3, what needs to be fixed now before these rules get any tighter. Here's your takeaway. Tax compliance is no longer a year-end exercise. It's becoming a real-time system, even if you're not making money. So get your processes right, get your data clean, and get your structure aligned before the rules force you to. And keep in mind, and this is a common theme through many of my videos, I am not asking you to hire expensive CPAs or expensive lawyers. I'm asking you to put money into your bookkeeping. Don't ever lose sight of that. I'm Duncan McPherson. Stay sharp, stay compliant, stay out of tax trouble, and I'll see you on the next video. Take care.